Hello friends, this is Martin from CK, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily technical analysis market show, where we look at what happened in the market and how we can look forward for a better trade for tomorrow. So if you're not subscribed, please subscribe and share it to your friends and colleagues so that all of us benefits. So what happened in the market today? A big sell-off happened. The bears have taken over. So without wasting time, let's deep dive into it. So as every day, what we do is we do the pre-market analysis for December 7, Tuesday 2021, tomorrow, and we will look at all of these parameters that you see on the left side on the charts, and we would additionally have analysis on the data which looks upon the open interest data, the volatility, institutional participation, sectoral watch, and global commodities, and it'll also wrap up with some actionables for tomorrow, right? So let's get in the charts and see. Look at this candle, wide range, big sell-off on Nifty and Bank Nifty. How much is that? 285 points, 1.65 long. So it has given up all the gains, and it formed a wide bearish candle that closed below the last 4 days of gains, right? Both of them. Last 4 candles low is breached, right? Bank Nifty also crashed 461 points, 1.3%, closing below the 4 days low again. So what happened in the intraday? The Nifty was trending clearly down. You can see this trending down. Same with Bank Nifty, but Bank Nifty did one attempt in between. There's a 15-minute chart for Bank Nifty and Nifty. Bank Nifty on the right side, and left side we have Nifty, right? So big sell-off that happened today. Volatility, Bollinger Bands, if you can see that it is clearly trending down, right? Lower low, lower high, lower low is getting formed in both, and as it's walking on the bands, and volatility is expand on the downside, and it's in deep trouble. Yeah, so support resistance, what do they say, right? Today it gave up 17,000 once again, and it has taken a support at 16,900, which is a Fibonacci support region, basically Fibonacci support zone, and if that's gone, then it takes a gap support at 16,700, 750 tomorrow, and if that is gone, then it takes 16,550, 16,600, 650, that range, and then 16,350, 450 range. So that's the downside fall. On the Nifty and the Bank Nifty, you have so what has happened is it has taken the support of 35, 600 or 900 range today. If that is breached, then you have let me just go back to the charts directly, because there is some confusion that's there down there. Yeah, so here it's a little more clear. So here you have it has taken the 35, 600, 900 support. If that's gone, you have 35,300, and that is gone, you have 34,350 to 34,750, which is Fibonacci 61. So if this 34,350 is broken, then we have trouble, because Fibonacci 61 is broken, means it's beginning of a big down move. It's what normally it indicates. So hopefully it will not go that far, but that's the downside. Upside, what do you have? The previous support, that is 36,300 to 36,500. Fibonacci 50, that's the resistance to the upside. That's breach, we have 36,600, and then you have 37,100 kind of range, and then above that you have 37,400 range. That resistance from the upside, and then downside we already seen. Let's get back to the slides. So that's what the price action is saying. Now let us look at the momentum and divergences. So momentum is, it's given up the momentum on the sideways, and it's gone to the bearish zone in the Nifty. Bank Nifty, it is already in the bearish zones, and it is resisting at the RSI 40. And interestingly, there is a bullish divergence that is unconfirmed, which can take the market up once again if it works out. It's not confirmed. Bank Nifty, you can see that there was this, last time when we discussed, there was a negative reverse divergence on the momentum, which seems to have played out, and although it has not met the target, in order for it to make it, there is a long way down, right? That means it has to retest the previous low. So there is bearish divergence that is halfway done Bank Nifty, and there is a bullish divergence that is unconfirmed on the bank on the Nifty. Otherwise, momentum is lost in the short term. From side is bearish on the daily candles and weekly, showing its sideways on both Nifty and the Bank Nifty. Trend indicators ADX is showing that DMI negative is dominating, and on both in the short term on both Nifty and Bank Nifty. But you can see that the strength of that is small, is slightly coming down. It means weak. There is some weakness in the strength of the trend. That's all. But otherwise, it's bearish on both medium term and short term. Wicks are short of 9% and settled at 20. Once again, 20 is back. Right? Anything at 20 and above is highly volatile. That's what we see in the markets today. Now implied volatility is 18.4. Wicks IVP, fee percentile is shot up to 59. Right? It can go up to 80-85 levels, and then it can shoot up. That's how it did in the last time when the COVID Wicks rose up also. So IV percentile is shooting up. It has gained a lot. Wicks is back to this. So there seems to be some kind of range formation that's happening between 18 and 21, probably. Right? We spent 4 months in this range between 14 and 11, and then another 2 months we spent between 15 and 18, and then probably we are forming a new range above 18 and about 20, which is highly volatile. That means market is going to go down probably, right? Because we shot up today another 9%. So that's what the volatility index is showing. In top interest analysis, if you see, it's overall a bearish charts. You can see all call writing on both sides, right? Look at the supports are seen at 16,004, right? Nearly 900 points down from here. 16,500 also has a good support zone. Support put writing is there. The resistance on the upside is 17,500, and above that you have 18,000. Look at the range, right? 17,500 where is it, and 16,000 where is it? So there's huge uncertainty and huge range, and bearishness hovering, hardly any supports getting written. So all call writing that has happened on Nifty and Bank Nifty. Look at the Bank Nifty ranges, 36,000 and 35,500. That's good put writing, and call writing is at 37 and 38,000 levels. Right, the put call ratio 0.4459 is not bullish at all. Short build up is what happened in the futures open interest build up. That's what happened actually. Look at the red order of the heat map. You can see that the IT gave up today. All of the giants, Reliance, HDFC, and ICICI Bank, all of them has gone red. And it's all red all over, right? It's nearly 300 points of down moves, obviously. Sectoral performance, if you see IT closed red, losing 2.7%, metal was 1.2% down, auto closed 2% down, pharma closed 3% down, FMCG closed 2% down, realty closed 1% down. All of them either in bearish or bullish on the short term. So you just have to wait before you can think of taking any long positions. Interestingly, the data is not there, but as of yesterday, the last 3 days of December, 7,000 crores of selling happened. Today also, obviously, another 3,000 of FI selling might have happened, obviously. Not sure how much DA might have. So data is not there. We'll have to check that later. Look at the dollar. The USD INR currency pair is shooting up, and also we can see that the dollar index is also rising up. It's green there. It is already broken out of the previous 2 resistance and it's climbing up. So it's at a resistance on the USD INR currency pair resistance zone, but yeah, it is with great momentum and it is likely to. So rupee is likely to for the weekend in a nutshell. Crude oil has dipped and then it does not seem to be climbing up more than much. Today also you have some kind of slight green moves there, but not above 68 level, 67 something, which is good for our economy. And the gold, if you see, it's consolidating around that same zone. It's a cup and handle, pattern handle. US markets are not open, so as of now this is nothing dramatic is happening in the US markets, and you'll have to check the pre-market before we can take a call on that. Externals too, IndusInd Bank and Maruti Suzuki, both are short positions. IndusInd Bank has lost the momentum. It is resisting at 60 momentum. Bearish ADX and poor volumes and charts are indicating that the channel may be broken. Maruti Suzuki also this resistance zone, and an inverted head and shoulder pattern, and momentum is dipping into the bearish zones on the short term, and ADX is down, volumes are low. So both are good candidates for shorting. RSC and Indian Bank. Wrap up. It's moderate bearishness in the short term is what the view, obviously, because Nifty Bank Nifty crashed further, giving up all the gains of the last week and lost 17,000 psychological support also. And again, it seems like it is heading towards the retracing the previous support. So the market view is bearish, right? And the chart, as the chart says, and the momentum and the trend also says the same, right? Continue, and institutional selling is continuing, so obviously. So the negative news that trigger this could be COVID, could be the year-end December volatility, or could be Fed tapering that is going to happen, or it could be any of these. But let's keep in mind that the correction has happened only 10% and 15% so far. So there is scope for and we have retraced only 23 if you do a Fibonacci retracement from the COVID times. So there is scope for further correction, right? So all we can do is type stop losses, hedge positions, right? That could be the only thing that you can consciously play the options with, right? Whenever VIX is about 20, it's hard to do the option selling and buying, right? Anytime reverse can happen, it can be choppy, so be careful about 20 VIX. If it cools up again, it can be back in the game. So that's the moderate bearish view that I have. Hope it helps you to form your own view and your own trading plan for the next day. Happy trading, happy learning. Thanks for watching. Bye.